Hey, it's Craig Haskell, founder of the Value Hound Academy, and welcome back to another video tip on how to become a value hound. In today's video, we're going to be talking about one of the many strategies used by value hounds to create value. With many properties suffering from lack of capital and poor management from today's distressed real estate market, there are lots of properties around the world that need to be revitalized, creating fantastic profit opportunities. Now, the revitalization strategy involves finding properties that are suffering from poor management, low rents, high vacancy, maybe some deferred maintenance, and or maybe a struggling property owner. There is another strategy we use called repositioning, which takes on additional characteristics related to redirecting a tenant base. Now, a reposition and a revitalization value strategy can be used together, or they can be used separately. But in this video, we're only going to focus on the revitalization strategy. So, properties that require a revitalization are mismanaged and not performing up to market standards. There's no limits to the size or type of commercial property that is underperforming and needs a revitalization. Let's face it, many property owners get into real estate game failing to realize that the property they own is a business. Investment properties need to be run like a business, not an investment. The strategy for value investors is to capitalize on property owners and managers that aren't very good at running their business and injecting quality management and the needed financial resources to better operate their property. By doing so, value investors are able to create value on these types of properties, which translates into higher generating revenues and higher value. Not every property is a fixer that needs capital improvements. Some properties only require new management with a new game plan, aggressive marketing, or simply raising rents. Let's make sure you have top management running your properties. Did you know that 70% of the success of a property is because of good day-to-day property management? Being a landlord has its challenges, so finding a good and reliable property management company will be important to you. Also, the cost to turn around an underperforming property can be higher than you expect. Make sure you have a conservative operating and renovation budget. The four costs to budget safely are vacancy, concessions, marketing, and construction costs. My property turnaround costs always seem to cost more than I planned, so now I add an extra 20% to my capital reserves budget to make sure I have enough money. Make sure you have enough funds to complete the job correctly. It's important. Also, make sure that capital improvement dollars in your renovations achieve a value component. For example, for every dollar of capital money you put into a property, you should at least get back $2, preferably $3, in equity appreciation. Finally, turning around properties requires aggressive marketing to attract new tenants. Hiring a proven marketing specialist will be critical to your success to fill up your property. Don't be cheap when hiring good marketing people. Pay a little extra for marketing early in the process will be far cheaper than the alternative. So make sure you get good marketing people. I recently interviewed Carlos Vaz, CEO and founder of the Conti organization in Dallas, Texas, who built his company to over 3,000 units within 3 years using this strategy. We're going to talk about an example. He takes distressed properties and turns around. Let's take a look at a property that he recently did. Now, this is an apartment complex. You can use this on any type of commercial property. We're going to use an example here of an apartment complex. And he turned around or revitalized this apartment building. It's called the Huntington Apartments. It was in Fort Worth, Texas. It was 208 units on about 9.5 acres. Now, the first thing he did to really turn around this property, he had to look at the problems. And he found a bank that had an REO, that had bad management, it had a poor resident profile because the banks don't know how to run properties. They had put $700,000 of improvements into the property, which is a good thing. They had the property listed for $4 million, almost $4.3 million. It was a distressed seller. They wanted to get rid of this property. So Carlos went in, saw the opportunity, knew the market, knew the property, knew the opportunity, and he was able to buy the property for $3.1 million, substantially lower than the list price. He installed new management, there was a lot of bad tenants on there. He evicted them. He started an aggressive marketing campaign because of his expertise. He brought the occupancy from 64% to 94% in almost 3 months. Not bad. He created value of $2.4 million. In less than a year, he created a 77% return on investment. In less than a year. I mean, come on, that is a great investment. And this was an underperforming property that he turned around, just revitalized it, didn't take any money to put in the property. He was able to do it just on a little extra management and some marketing. Now, you can go out and find opportunities like this. They're out there if you have to have the expertise. So that's kind of how the revitalization process works. I hope this information has served you, and I look forward to helping you with your real estate investing. See you next time.